Nightly Business Report.
Good evening. Tonight, as stated in today's 2025 budget presentation, Sri Lanka intends to significantly raise the minimum salary for workers in public sectors to 40,000 rupees. The modification, which will be implemented in phases and cost 325 billion rupees, includes an 80% increase in annual increments. Plans to create a digital economic authority and fortify Sri Lanka's regulations governing digital payments were announced by President Kumar Dissanayake in order to achieve a digital economy valued over $15 billion by 2025. The All-Share Price Index and S&P SL20 indices both recorded advances on the opening trading day of the week, indicating good action in the Colombo stock market. And with worries about US trade tariffs and high interest rates still weighing on the market, the majority of Asian stocks stayed in a flat to low range today.
From Studio 24, here's Anuradhi Vikramasinghe.
A very good evening and thank you for joining us. Sri Lanka plans a major salary increase for public sector employees, raising the minimum salary to 40,000 rupees as outlined in today's 2025 budget presentation. The revision includes an 80% hike in annual increments and will be implemented in phases, costing 325 billion rupees, and 110 of those rupees will be allocated in 2025, along with higher retirement benefits and increased distress loan limits.
Sri Lanka has proposed a significant increase in the minimum monthly salary for public sector employees, raising it from 24,250 rupees to 40,000 rupees. The salary revision also includes an 80% increase in the annual salary increment, raising it from 250 rupees to 450 rupees. This salary increase will apply to judicial services, public corporations, university staff and officers of the Triforces, ensuring parity across the public sector. The total estimated cost of the salary increase is 325 billion rupees with a phased implementation due to fiscal constraints. 110 billion rupees will be allocated for the first phase in 2025. The proposed revision will also affect retirement benefits, which will be calculated based on new salary structure for those retiring from January 2025 onwards. Additionally, the distress loan limit for public servants will rise from 250,000 rupees to 400,000 rupees.
Sri Lanka's President Kumar Dissanayaka's budget delays the imputed rental income tax and focuses on vehicle imports for revenue. The budget targets a 15.1% GDP tax rate for 2025 with new taxes on digital services, corporate income and cigarettes to offset losses. Efforts to improve tax compliance and digitalize administration are also highlighted. Sri Lanka's President Kumar Dissanayake has announced his maiden budget, which delays the implementation of the imputed rental income tax, initially planned for 2025. Instead, the government aims to generate most of its revenue from the liberalization of vehicle imports, which began on the 1st of February this year. The budget outlines an additional 225 billion rupees in expenditure with a target of achieving 15.1% of GDP in tax revenue for 2025. To compensate for the delay in rental income tax, the government is introducing new taxes including VAT on digital services, corporate income tax on exports. The budget also emphasizes improving tax administration and compliance through digitalization to minimize leakages and enhance transparency. Efforts will be made to reduce human interaction in tax processes while strengthening institutional capacity. The government is carefully monitoring the impact of vehicle imports on economic stability. President Kumar Dissanayake announced plans to establish a digital economic authority and strengthen digital payment laws in Sri Lanka. The government aims to phase out cash transactions, boost cybersecurity and attract investments in emerging technologies, targeting a digital economy worth over $15 billion by 2025.
President Kumar Dissanayake has revealed plans to establish a digital economic authority as part of Sri Lanka's push toward a digital-first economy. In his 2025 budget speech, he stressed the need to phase out cash transactions, with the GovPay platform serving as a key step in this transition. The government will also introduce new laws to strengthen cybersecurity, data privacy, and data security to support digital payments. Dissanayake highlighted the importance of fostering investments in emerging technologies like artificial intelligence, robotics, and fintech. The goal is to grow Sri Lanka's digital economy to exceed $15 billion or 12% of the GDP by 2025. To achieve this, 3,000 million rupees has been allocated for digital economic development. The president emphasized that strengthening the digital economy will help enhance financial inclusion and drive economic growth. These measures reflect a broader commitment to modernize Sri Lanka's economy and ensure its competitiveness in the global digital landscape.
President Anurakumar Dissanayake has set a target of attracting 25 million tourists by the end of 2025, with 500 million rupees allocated for infrastructure and promotions. The government plans to develop untapped destinations like Anuradhapura and Yapahua and introduce a digital ticketing system to improve tourism operations. Sri Lanka's tourism sector is set for significant expansion with the goal of attracting 2.5 million tourists as outlined by President Anurakumar Dissanayake. To support this ambitious target, the government has allocated 500 million rupees for enhancing tourism infrastructure and promotional activities. Key to this initiative is the focus on developing untapped tourist destinations such as Anuradhapura and Yapahua, which will be marketed as must-visit locations. By promoting these lesser-known areas, the government aims to distribute tourism more evenly across the country, reducing the strain on popular spots. Additionally, a fully digitalized ticketing system will be implemented, improving convenience for tourists and streamlining the booking process. The move towards digitalization reflects Sri Lanka's commitment to modernizing its tourism operations and enhancing the overall visitor experience. The increased investment in infrastructure and technology is expected to make the country more attractive to international tourists. Ultimately, these measures are designed to drive long-term growth in Sri Lanka's tourism industry, positioning it as a competitive destination on the global map. President Anurakumar Dissanayake has allocated 604 billion rupees for the health sector in 2025, with 185 billion rupees for medicine supply. Additional funds will support nutrition packs for pregnant mothers and the 3-Posha program. The government also plans to digitalize key health institutions for better efficiency.
President Anurakumar Dissanayake has announced a significant increase in the 2025 budget allocation for the health sector with a total of 604 billion rupees. A key focus on this allocation is the supply of medicines, with 185 billion rupees dedicated to ensuring a steady and reliable stock. The government is also prioritizing maternal and child health with 7.5 billion rupees earmarked for nutrition packs for pregnant mothers and 5 billion rupees for the 3-Posha program aimed at addressing malnutrition. To enhance the overall healthcare system, the President committed to digitalizing the National Medicines Regulatory Authority and State Pharmaceutical Corporation. This move is expected to improve operational efficiency and transparency within the healthcare supply chain. The increased investment also highlights the government's commitment to improving healthcare access and quality for citizens. By focusing on both immediate needs such as medicine supply and nutrition programs and long-term solutions like digitalization, the government aims to modernize the healthcare sector. These measures are expected to have a significant impact on public health, ensuring better service delivery and support for vulnerable populations.
The President has also announced improvements to Sri Lanka's public transport systems this year in the budget. This includes 100 luxury buses under a new metro bus company, 500 million rupees for train renovations, and plans to extend the Kalani Valley line with 250 million rupees allocated. President Anurakumar Dissanayake has revealed plans for significant upgrades to Sri Lanka's public transport systems in the 2025 budget. A key initiative is a pilot project introducing 100 luxury coach buses along 3 main corridors entering Colombo city, with an allocation of 3,000 million rupees for the buses. These buses will be managed by a new entity, the Metro Bus Company, and will feature full digitalization to improve efficiency and service quality. The Sri Lanka Transport Board will also introduce 200 additional luxury buses using its own funds. In the railway sector, 500 million rupees will be allocated to renovating existing train compartments, while 250 million rupees will be set aside for the local manufacturing of new compartments. The government plans to extend the Kalani Valley line beyond Avisavilla in phases, with construction starting after a detailed study of the affected areas. These efforts reflect the government's commitment to improving transportation infrastructure, enhancing the convenience of daily commuters, and supporting long-term growth in public transport services. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The Colombo stock market saw positive movement on the week's first trading day, with gains in both the All-Share Price Index and S&P SL20 indices. For further insights on this, we speak with Akna Thinnakun from First Capital Holdings.
Thank you. Today, the Colombo stock market showcased a remarkable uptick as the ASPI crossed the 17,000 mark. So the ASPI concluded today's session in the green at 17,156 having risen by about 219 points. While there was some noteworthy volatility during the early hours of today's session, the SPI inched upwards in a consistent manner throughout the day. This improvement was fueled by higher trade volumes and investor participation. Turnover rose to 5.4 billion rupees from 4.6 billion rupees seen in the last trading session. Over the last week, we saw turnover improve consistently. However, today marked a noteworthy upward swing as turnover inched even closer to the monthly average of 5.7 billion rupees. This turnaround seen in the stock market could be a reaction to the national budget which was announced earlier today. Selinco Holdings, Melster Corp, NDB, Sampath Bank and Halis were the top positive contributors to the SPI. On the flip side, Richard Peries and Company, Brown's Investment and Ceylon Beverage Holdings were the top negative contributors to the SPI. In terms of contribution to turnover, the insurance sector showcased dominance, followed by diversified financials and the banking segments. Thank you.
The market started the week with gains, maintaining last week's positive performance in the ASPI and S&P SL20. While optimism is high, the direction for the rest of the week remains uncertain. For further insights on this, we speak with Ranjan Ranatunga from First Capital Holdings.
Thank you, Anuradhi. The All-Share Price Index continued to edge up higher during today's session on the back of increased optimism from the Budget 2025. Going forward, we expect the positive momentum to continue, improved by the improved investor sentiment and continuous improvement in key economic indicators. Amongst the key economic indicators, interest rates are going to be key, with interest rates pressure expected to remain minimal, with AWPLR continue to come down on a weekly basis, which was recorded at 8.42 on last week. We believe the market can see continuous improvement in activity levels, mainly due to the fact that the lower interest rates will translate into limited investment alternatives for investors. Furthermore, we have also seen the treasury bill yields coming down for 10 consecutive weeks, also pushing down the cost of funding for investors. Furthermore, on the back of that, together with the low interest rates, the corporate earnings are also on a positive swing. And the December coming earnings are expected to remain positive as well, further boosting confidence on equities. Considering the above positives, together with the increased optimism from the Budget 2025, we expect equity markets to edge up higher, refreshing all-time highs during the coming week. Thank you.
The 2025 Sri Lanka budget focuses on boosting revenue, increasing public sector wages and attracting foreign investment, while promising concerns remain about rising debt and inflation. The true impact on Sri Lankans will depend on how effectively these policies lead to economic stability and growth. For further insights on this, we speak with Dimantha Matthews from First Capital Holdings.
Thanks, Anuradhi. So this time's budget, the government is trying to significantly increase revenues, and with that we are seeing the revenue as a percentage of GDP increasing to around 15.1%, which is like a very good sign. However, broadly it looks like a welfare budget, because with a lot of expenses going into salary increase of Aswasuma, then pension schemes, and also a lot more giveaways coming in the way. And also with that, the government is also looking at giving a boost to the economy. So with that, they have significantly increased the public investments. So with it, the public investments are going up to around 4% of GDP, and with it there is only going to be a very slight decline in the budget deficit. So budget deficit stands high compared to the last year's estimate of 6.8% of GDP. This year for 2025, the estimate is going to be around 6.7% of GDP. However, on a positive side, we are continuing to see the primary surplus being maintained, however slightly lower than or slightly higher than last year, 2.3% of GDP compared to the estimated 2.2% of GDP during 2024. So this year also the spending patterns are going more or less in terms of, if you take the public investments, they're going into a lot into education, healthcare, and also infrastructure development has been made a priority as well. And with it we feel that there is likely to be significant amount of money spent or looked at the development side of things, where there's going to be a lot of infrastructure development coming in place. And in addition to that, because education and healthcare has been made a priority, investments going into that area also somewhat could be related to infrastructure developments as well. In addition to that, the government also has looked at concentrating on the industry segment, and there is a lot of activities aimed at those segments, and also number of areas where they are looking at increasing revenues. For example, where the WHT has already announced to be increased and so on. So however, the important factor to look at is whether they can reach their revenue targets. If that is the case, then they can maintain the budget deficits at a controlled level, and with it it will significantly help the revival of the economy, because the spending is going more in line towards development. Thank you.
Gold prices rose today as the US dollar weakened, attracting investor interest. Spot gold climbed 0.6%, reaching $2,900.47 per ounce, while US gold futures gained 0.4%, settling at $2,912. Investors are closely monitoring US President Donald Trump's plans for reciprocal tariffs, which could heighten global trade tensions. The uncertainty surrounding these potential tariffs is driving investors towards safer assets like gold. The ongoing trade concerns have prompted increased demand for precious metals as a hedge against economic instability. Analysts expect further fluctuations in gold prices as more details emerge about the US tariff plans. Oil prices remain largely unchanged as investors focused on potential progress in peace talks between Russia and Ukraine. Brent crude futures rose by 7 cents to $74.81 a barrel, while US West Texas Intermediate crude remained stable at $70.75 a barrel. Market attention is centered on developments regarding peace talks, with US President Donald Trump announcing that discussions with Russia have begun to end the war. Trump expressed optimism about meeting Russian President Vladimir Putin soon to discuss peace. Meanwhile, US Secretary of State Marco Rubio emphasized that any serious negotiations would involve Ukraine and Europe. Sanctions imposed by the US and EU on Russian oil exports have significantly disrupted global supply flows. The Sri Lankan rupee remains steady today against the US dollar, showing little change compared to last week. According to the Central Bank of Sri Lanka, the buying and selling rates for the US dollar are stable. Let's now take a closer look at how the Sri Lankan rupee is faring against other major global currencies. Short break now. This is the Nightly Business Report. Welcome back. Samsung Sri Lanka has launched the Galaxy S25 series featuring advanced AI-driven technology, Snapdragon 8 Elite mobile platforms and enhanced camera features. The series sets a new standard in mobile experiences with its cutting-edge performance and intuitive user interface. Samsung Sri Lanka has launched the highly anticipated Galaxy S25 series featuring AI-driven innovation that enhances user interaction and prioritizes privacy. The devices are TRCSL approved, ensuring uninterrupted connectivity, and come with a range of AI-powered features like circle to search, context-aware assistance, and enhanced natural language understanding. The series also emphasizes security with Knox Vault, post-quantum cryptography, and on-device AI processing for personalized experiences. The Galaxy S25 Ultra sets a new standard for mobile photography with its 50-megapixel ultra-wide sensor and professional-grade editing tools. Samsung has also focused on sustainability using recycled materials and guaranteeing up to 7 years of OS and security updates. Customers purchasing the series can enjoy up to 51,850 rupees in discounts and exclusive offers, including 1 terabyte of free data. The S25 series is now available at various authorized retailers island-wide. The Bank of Ceylon has launched a new points-based reward scheme, Rewards Plus, for its credit card holders to enhance customer engagement and loyalty. The program allows customers to accumulate points based on their spending, which can be redeemed through various options such as e-vouchers, online shopping, travel bookings, and bill payments. BOC's Deputy General Manager Y.A. Jayathilaka emphasized that the scheme provides customers with greater flexibility and value for their everyday spending. The Rewards Plus scheme is aimed at promoting increased usage of BOC credit cards while offering more personalized rewards. This initiative complements BOC's ongoing discount programs, including seasonal offers at supermarkets, hotels, and restaurants. The bank expects the scheme to drive higher customer satisfaction and reward loyalty among its credit card users. Haley's Fabric plc and South Asia Textiles Limited have made history as the first Sri Lankan fabric manufacturer to receive validation from the Science Based Targets Initiative for their net zero emissions goals.
Haley's Fabric Group has achieved a significant milestone by receiving validation from the Science Based Target Initiative for its sustainability goals. This endorsement places the company at the forefront of sustainability efforts in the region, aligning its operations with the Paris Agreement 1.5 degrees Celsius pathway. Haley's aims to reduce its Scope 1 and 2 greenhouse gas emissions by 42% and Scope 3 emissions by 25% by 2030. Additionally, the company has committed to reaching net zero emissions by 2050 with reductions of 95% in Scope 1 and 2 emissions and 90% in Scope 3 emissions. Achieving these targets require a comprehensive approach with a focus on collaboration across the entire value chain. The company's dedication to sustainability is further reflected in its efforts to gather accurate data, especially for Scope 3 emissions, which represents the largest portion of its carbon footprint. This achievement establishes Haley's Fabric Group as a leader in sustainable manufacturing within the Sri Lankan fabric industry.
Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Most Asian stocks remained in a flat to low range today, with concerns over US trade tariffs and high interest rates continuing to weigh on the market. Chinese markets, which had seen an AI-driven rally, paused for a breather, while Japanese shares showed little response to strong GDP data. Australian markets declined from record highs as the Reserve Bank of Australia began a two-day meeting with expectations of a rate cut. Regional markets followed mixed cues from Wall Street, where softer-than-expected retail sales raised worries about a slowing economy. US stock index futures rose slightly in Asian trade despite Wall Street being closed for holiday, while major indexes in China and Hong Kong fell, and Japan and Singapore saw modest gains. French luxury group Hermès reported fourth quarter results well above analyst expectations, showing robust appetite from wealthy consumers for its most expensive items, including Birkin bags, which cost to an upwards of $10,000.
French luxury group Hermès reported fourth quarter results well above analyst expectations on Friday, and revealed a robust appetite from wealthy consumers for its most expensive items, including Birkin bags. They cost upwards of $10,000. Posting quarterly sales up by around 18%, Hermès continues to outshine rivals like LVMH and Kering-owned Gucci. The industry is suffering its slowest sales in years. Global luxury sales fell around 2% last year, hurt by a property crisis crimping spending in China and inflation-weary shoppers elsewhere. Shares in Hermès were up 4.5% in early Paris trade. It said sales for the fourth quarter rose 18% to over $4.1 billion. The double-digit growth contrasts with LVMH's 1% rise over the last 3 months of the year. The Asia region, excluding Japan, is Hermès's biggest market, and sales there grew 9% in the fourth quarter. Asked about the impact from potential US tariffs on European goods, Executive Chair Axel Dumas said the company would not adjust its production. Hermès announced it would be raising prices by 6 to 7% this year to reflect higher production costs and exchange rates.
India's demand for back taxes running into a record $1.4 billion from Volkswagen after 12 years of scrutiny is reigniting concerns that lengthy investigations and litigation could sour the plans of foreign firms in the country.
India is demanding back taxes running into a record $1.4 billion from Volkswagen after 12 years of scrutiny. In return, VW is suing Indian authorities to quash the demand. But there are concerns that lengthy investigations and litigation could sour the plans of foreign firms in the fastest-growing major economy. Automakers such as Hyundai, Honda and Toyota face demands of about $6 billion collectively. That's in disputes on income tax, customs and other payments that go back years, according to Reuters analysis. Prime Minister Narendra Modi has been courting foreign investors with promises to simplify regulations. But lengthy tax investigations remain a sore point. In one high-profile incident, telecoms company Vodafone won its case against a $2 billion retrospective Indian tax demand after more than a decade of legal battles with New Delhi. Now VW's move on January the 29th to sue India for $1.4 billion is making foreign companies nervous. Tax advisors and lawyers say they are getting queries from clients about how years-old tax cases could come back on them. India's finance ministry did not respond to queries from Reuters. Modi wants to turn India into a manufacturing hub, but many electronic and auto companies rely on assembly operations using parts imported from markets such as China and Europe, and that often spurs investigations.
But that's all from us from the Nightly Business Report for today. We'll see you again tomorrow with the latest updates across the business globe. Till then, I'm Anuradhi Vikramasinghe. Thank you very much for watching. Have a good night.